Hello, everyone. Welcome. We're happy to have you with us today. My name is Carrie Ferg, and I'm your host for the Manta Trends webcast, Avoiding Sales Tax Audits and the event. Let's first talk about your screen. During the webcast, you should see a slide area. Left of that is the media player, under it a box called the resource list, and some widgets. All of the widgets open and close. If you're having technical difficulties, please click on the Help widget, the one with the question mark icon. My colleague Mel is answering your technical questions, so just send her a note. Next, I'd like to introduce Graham Klein, our community manager, who will be fielding your questions today.
Hello, everyone. I'll be helping with questions today. I know you'll have a lot of questions about our content once we get going, so ask them anytime. Just click on the Q&A widget and type in your question, and I'll push them along to Carrie and our expert, Mark. Carrie and Mark will be answering questions during the last 15 minutes of the webinar, but please ask them as soon as you think of them. After the webinar, I'll be hosting a discussion with Mark and our community. Join us, and Mark will answer any lingering questions you have about sales and use tax.
Thanks, Graham. Now let's get down to business. I'd like to introduce our expert today, Mark Giddens. Mark Giddens is one of Avalara's founding employees, and he's worked in accounting and sales and use tax management for over 16 years. He is Director and Tax Technology Expert at Avalara. Click on the speaker widget in your console to learn more about Mark. We're glad to have you with us today, Mark. I'd like to hand it over to Mark now. He's going to walk us through the key pitfalls small business auditors should avoid to keep out of auditors' line of sight, and if they do come knocking, how to be ready.
Thanks, Gary. The odds that your small business will be targeted for a sales tax audit are actually greater than you think. To make up budget shortfalls, states are hiring more auditors and keeping them busy. This Get Audit Ready checklist can help you assess your small business's compliance readiness. Should the auditor come knocking, you'll be less inclined to bolt the door. State budget deficits have created an ever-increasing focus on enforcement via state sales tax audits. Just to give you an idea, California announced hiring 100 auditors over a 3-year period just a couple of years ago. Idaho announced hiring 48 temporary auditors to see if they could move the needle on revenue collection. It was so successful that they kept all 48 auditors on as full-time staff. When you ask businesses about the impact on their business if they were audited, 44% can't remember the last time they updated their sales tax processes. 48% concede that an auditor would find a mistake, and the average cost of a sales tax audit has surpassed $100,000. It's no question that auditing is an area of concern for any business. All the more reason to pay attention to the following tips. Tip number 1, know where you owe. Sales tax varies widely by state, industry, even by the types of products and services that you sell. The complexity increases as your business grows. Nexus laws now apply to online and out-of-state companies, not just those with headquarters, warehouses, and other physical plants in a state. To see if your compliance obligations have changed, ask yourself the following questions. Do you plan to add locations or remote employees? Do you send salespeople to meet with customers, partners, prospects, or do you attend events? Do you use third-party fulfillment services like Fulfillment by Amazon, more commonly known as the FBA program? Do you perform on-site services like installation of tangible personal property, repair, warranty, or maintenance? Tip number 2, assess your risk. Much like businesses, auditors are measured on productivity and look for patterns of non-compliance. The more you know about how to calculate, collect, and remit sales tax, the more likely you are to catch any mistakes or oversights and correct them prior to an audit. Review your compliance practices to make sure you understand your filing requirements, that you've made accurate tax calculations, that you can justify product taxability or exempt sales decisions, and that you keep detailed sales records and have them accessible in an easy manner should you go through a tax audit. Tip number 3, be proactive. There are steps you can take to decrease the chance that you'll be audited or reduce the likelihood that you'll be assessed for uncollecting tax, being charged fines, penalties, interest. Conduct a nexus study, and actually Avalara can help with this. You'd also want to stay up to date with rate, rule, and boundary changes. Make sure that you're reporting your consumer's use tax, and replace your manual processes with automation. There's no way to predict whether or not the state will come calling, but with a little advanced planning, you can minimize the impact of a sales tax audit on your business. Better yet, just put an X in the box next to Automate Sales Tax with Avalara's Avatax and cross compliance off your list.
Thanks, Mark. Now we're going to take a few questions from the audience today that may have arisen today or during one of the tax webcasts held earlier this month. I've got one question here, Mark. Do auditors ever make mistakes? How would I know if one had been made?
That's a great question. And, it actually makes sense in light of how states are hiring auditors. In effect, these sometimes are new employees, but auditors have made mistakes. One of the things that companies can do is either internally perform their own audits after an audit assessment's been made, or they can hire an outside provider like a CPA or sales and local tax consulting firm to do a reverse audit. There's companies out there that if you've gotten an audit notice can perform audit defense, but there's times when auditors make mistakes, either in terms of the assumptions that they're making on the taxability of an item or the way that they're interpreting the law. And it's really important if you're a company that's gone through an audit, you've been assessed a fine or penalties or interest, that you know there's resources available to see if there's a chance to fight that audit.
Thanks for the advice, Mark. We have another question here. It sounds like automation is key to avoiding sales tax errors. I am a sole proprietor, though, and I don't have employees yet. Does it make sense for me to automate?
Another good question, Carrie. With Avalara, we provide sales tax technologies for all sizes of businesses. And, we work with everyone from small mom and pop companies, sole proprietors, on up to really large companies. And, in my experience, the number of employees that you have may or may not make a difference in terms of how challenging your tax requirements are. For example, if you're a sole proprietor and you're selling online and you've created Nexus in a number of jurisdictions, you could have the same complexity as a much larger company. So typically, even if you're a sole proprietor or a small company, the tenets of automation can benefit your company as well. You still have to do things like research tax rates, build tax tables in your accounting or e-commerce systems. You need to research how the items and services that you're selling are taxed. You need to run reports and fill out forms and cut checks and pay taxing agencies. So the mechanics of that for a small company aren't very much different from a large company, and employee size doesn't tend to have much of a bearing on that. So certainly I think even the smallest of companies could benefit from considering automation.
I think that makes a lot of sense. We've got time for one or two more questions here. So we've discussed audits and how to avoid them. But if the inevitable happens, what does the audit process look like?
Well, it's another interesting question because one of the misnomers out there is how audits are performed for sales tax audits. A couple of things that are key in a sales tax audit nowadays are on purchases. So when companies buy things, especially from out-of-state sellers, and those vendors don't charge their business sales tax, it's up to the purchaser to self-assess and pay consumers use tax. So one area that auditors really focus on nowadays is reviewing the purchases of a company and making sure if tax wasn't charged by a vendor, that tax has in fact been remitted to the government. Another area of increasing importance is around exemption certificate management and what we call exemption audits. When sales tax has not been collected because you've made a sale to an exempt entity, someone in the supply chain, maybe a manufacturer or a reseller, the auditors are looking for those zero tax transactions, and they want to see the accompanying documentation, the actual exemption or resale certificate, to prove that that transaction was exempt from tax. One of the misnomers as well around audits is just the way that audits are performed in terms of looking at transactions. Nowadays statistical samples are typically performed rather than looking at every transaction for a company. So what auditors are looking at is, instead of, maybe an audit period is, a 3-year look-back period in a state, instead of looking at 3 years worth of transactions, what an auditor will do is ask for a statistical sample, maybe the last 3 months or the last 3 Januaries. And what they'll do is they'll tabulate how much tax was collected versus how much tax should be collected. That typically creates what's known as an error percentage, and that error percentage can be applied across the whole term of that audit. So in other words, companies traditionally have thought, well, if I missed collecting $100 in an audit, I'll just pay that, if I miss collecting $100 in tax and an auditor finds that, I'll just pay that $100 in tax in an audit. And the situation's actually normally different. A mistake for $100 could be exponentially more damaging in terms of, the amount of fines that are levied, but also in terms of penalties and interest on top of that as well. So some things there I think you'd want to be careful about. Yeah.
We've got a couple more quick questions, and then we'll have to wrap it up. One person is asking, what about eBay sales within the same state, such as California? What is the rule for taxing?
Well, the rules for taxing don't really differ whether you're selling on eBay or your own website, in the sense that if you're the merchant of record and you have nexus in the jurisdiction that you're selling into, you would be required to register and collect those taxes, in this case, from your California customers. So as I've been on eBay and have done some research on there, I've seen vendors that in their, in their description of their items and what they're posting online, they have a disclaimer that says, if you're a California customer, you'll be subject to paying sales taxes as well. And then they can just collect that tax as a part of their invoicing process with their customer. But the Nexus rules really don't differ whether or not you're an online business or you're some other kind of seller. If you have Nexus in that state, when you're making a sale, you're required to collect the taxes.
Okay, and the last question here, it's sort of related, is if I sell swags through Amazon, am I liable for sales tax?
Again, the answer is potentially. The thing that you'd want to review is, have you created a nexus? And in our previous webinars, we talked about nexus and what it is. It's basically a substantial physical presence. If you've created a nexus with a state, regardless of the channel or the way that you're selling, you'd be responsible for registering and collecting those taxes, if in fact, of course, the items and services that you're selling are taxable in that state or jurisdiction.
All right, well, thank you so much, Mark. We've got to wrap it up, but if your question wasn't answered, head over to the Manta community to get your question answered by Mark. Just visit community.manta.com/ and click on the Ask the Expert banner to pose your question anytime within the next hour, and Mark will answer you there. If you missed the first 2 webcasts in this series covering 10 easy-to-remember sales tax rules and tips for online sellers, it's not too late. You can view them on demand, and they're easy to access today via the links in the resource list. Also, be sure to sign up for our October 29th Expert Webinar on Innovation, which is also linked in the resource list. Thanks again to Avalara for sponsoring today's webcast and to everyone for attending.